Hello, Joe Novickus here. I'm going to go over with you on what I'm seeing in the overall market. Today is December 9th, but you could basically apply this to any time because charts and patterns will always repeat themselves. So here I have is SPY. This is the ETF, the Exchange Traded Fund for the S&P 500. And so this is a great way to trade the overall market. Today you can see there's 124 million shares exchanged hands, and there's high option volume in this on a daily basis. There's weekly expiring option contracts, monthly, quarterly, and then you have the long, the leap options. So there's a lot of different things you could do here. If I were to kind of show you what I'm seeing in the level at the current time, you could kind of see I have a high here of 208 roughly, and so you could see my floor right now is right around here. And so we're trading in a very tight congestion pattern. If I were to go from the top of my channel to the bottom of my channel, you could see roughly we're around a 4%. It looks like a 4% move between floor and ceiling. So this doesn't get us too excited at the current moment, but at the same time, we're kind of more or less just kind of watching a market slowly go from top to bottom. Okay, so I saw a lot of you guys, I was looking through your trades, a lot of you guys are buying heavily right on these days. And so you have to remember the trend line for the overall market right now is at its resistance level. So what you're saying is basically you're going to buy 5 stocks, you think it's going to break this resistance level, and you're kind of buying on a day, and then this day occurs, and this wasn't a major pullback in the market. If we look, we have much worse off days than that one, and this was just a minor sell day, and you could feel the pain in your trades on that particular day. So what you want to do is you want to make sure you watch the overall market. At the same time, you're looking at your individual stocks. You don't want to load up on the long side. You don't want to load up on the short side. You want to basically identify the stocks that aren't necessarily trading with the overall market. If we look back here, we could kind of see our old level from top to bottom. We saw a pretty big correction here, about 9.48%. That was our correction in October. But what made this correction unique is usually it takes twice as long to kind of make up a sell-off, a correction. And you can see here in very short window of time, we got back up, and it looks like in 12 trading days. So in 12 trading days, we got back. And here we are in this range. We just kind of have been drifting upward, very low volatility in this market. And now you see this really isn't heavy volatility. In the grand scheme of things, when we look at the overall market and we kind of go out further, you could kind of see, I'll go out to a year here, you could kind of see, this isn't major market average that we have right here. We kind of have a drifting up, and now we're kind of getting to a range where we're very tight consolidation period where the market's trying to decide if it wants to go higher or pull back. So we got to be careful. We don't want to run in and trade. I'm kind of indifferent on trading this right now. If anything, I would maybe for my option traders, maybe you want to do some vertical credit spreads, collect some money that way. But as far as buying calls and puts right now, your risk that you're taking is not really good in comparison to what you're looking to gain out of the trade. So overall, just follow the overall market, place your trades, and really wait for these moments to occur. When these moments occur, this is when SPY really is a good way to trade options. You could even trade SPY itself if you don't feel comfortable with the options at this point. Right now, we're just kind of waiting. We're in a holding pattern. So follow the overall market as you're making your individual stock trades. And when we do get to this level of 208 on SPY, don't run in and buy 10 long positions on 10 different companies. Be a little more choosy on the companies that you're picking and that we're seeing. So there you have it. But this is just such a unique market in the grand scheme of things. If we go back in time and we were to look going back a few years, you could just see, you know, where did some big corrections occur, and you have a correction, you know, right in this range, and look how long it took in days to get back up to the level before it corrected, right? And then you come here and you kind of see the same thing. But when we come up to this correction, that correction and the retracement happened very, very quickly. So this market is unique right now. It's not going to go up forever. We don't know when it's gonna correct again and pull back. But when it does, we want to be ready. We want to trade, and the SPY is a great way to trade volatility because of the high amount of liquidity that is in the stock and then also in the options. So hopefully some of this made sense. But follow the overall market. You know, we could look at other markets here. So let's look at the NASDAQ, and you can see the NASDAQ looks very, very similar to the chart I just showed you. So the NASDAQ is basically your tech stocks. So if you want to trade the NASDAQ, you'd trade QQQ. You'd want to do it for that. For the Dow Jones, the Dow 30, you want to do the Diamond, DIA, and you can see that chart looks very, very familiar. And now if we look at the small caps, would be the Russell 2000, would be IWM, and you can see this, it's a lot different. So what we see here is we see congestion, heavy congestion right now. So, and remember, this is for the whole year. And if we go back on our pattern and we look closer to, you know, 3 months, you can kind of see that pattern but it hasn't continued climbing like the other ones. So the IWM is really lagging in comparison. But look at the volatility here. You know, you trade at 114, 118 on one day. So that's a much bigger spread than what we're seeing in some of the other markets. So study those four charts consistently. Always be looking at your SPY, your Diamond, your IWM, and your QQQ to see what the overall markets are doing. And don't be afraid to trade those when the time comes. But as you're making your overall trades, kind of keep a glimpse at what the overall market is doing. All right, happy trading.